Hello everyone, welcome to my channel. I'm Jinlong Didi. What are we going to talk about today? Today, let's talk about last week's Black Friday. It was quite dramatic, starting from a high point, almost like this. From the highest point, if we look at it objectively, it seems quite realistic in hindsight, because it fluctuated almost the entire day. The highest point went from a 3.3% increase to nearly a 10% drop. With such a big drop in 1 week, many people are wondering if this correction has been fully digested. Let's think about it. In a scenario where the entire market is imposing tariffs like this, when was the last time tariffs were increased so aggressively? In the mainland, we often see some news. What is the main summary of this news? It was during the rule of the Hoover administration. At that time, when Hoover was elected president, everyone knew that the United States was in the Great Depression. However, the overall tariff level then was possibly even more aggressive than now, reaching nearly 60%, which led to price increases. After the prices rose, it resulted in an economic depression. One thing everyone needs to consider is whether this bear market has truly hit bottom. I can responsibly tell everyone that this is just the beginning, because we can discuss this from both political and economic perspectives. The essence of imposing tariffs is that the powers of the Federal Reserve and the president are independent of each other. During Trump's tenure, he definitely wanted the Federal Reserve to loosen its policies, because if the Federal Reserve doesn't ease its policies, it means that the current monetary environment, including the performance of these leading companies, cannot be improved. I've discussed this point with everyone many times, and the market ultimately reflects it. Whether it's through regular investment, or however you participate in index trading, when it truly falls, ask yourself how much ammunition you have in your pocket. If it's regular investment, you could say that over the past year, all regular investments have been dismissed. No matter how you invest regularly, you're still stuck in it, unable to move. For example, some people around me started investing regularly from this point, and even though they've been investing all the way up to this position, overall, they're still losing money. So, do you think regular investment is reliable, right? After discussing this, I still want to talk with everyone about how far this bear market will fall. Currently, looking at the entire index, the Nasdaq index, it has fallen, and now there might still be a space to drop another 1,000 points. This point is 15,500, and there's still a space of 1,000 points here. After this drop, I think there's a high probability that it will stop at the 15,500 level. If the 15,500 level is broken, then I can't imagine what the space will be like after that. Because generally speaking, when it falls to this position, the previous high of 2021, if this position holds, it will stay here for a relatively long period, always observing how the economic policies are released. But with the current interest rate decisions like this, I think after the consolidation, eventually when the valuation stabilizes, it will definitely end the bear market, with the implication that we are heading into a recession. From my own experience, this round of adjustment might just be starting, so don't be too optimistic. But what actions should we take at this time? I have some small suggestions for everyone. Whether you choose to follow them is up to you. The stock index has already pulled back by about 22 points from its high. So, objectively speaking, if you have a large sum of money on hand, for example, if you want to invest regularly, how would you go about it? Let me first talk to everyone about the entire timeline for regular investing. For instance, it has already dropped by 22%, because we don't know how much further it will pull back. Because if it's the most pessimistic scenario, that would be the Dow Jones being cut in half, which is the most pessimistic scenario. If we're not that pessimistic, then the Dow Jones might drop by about 10 to 30 points and then stabilize, which is not as pessimistic. But if we're particularly pessimistic, then the Dow Jones might be cut in half. Then everyone can evaluate their positions this way. The worst case scenario is the Dow Jones being cut in half, which means you need to invest 100% of your position. Now it's already down by 20 points, right? Honestly, you should invest about 30-40% of your position, and not all at once, because in a minor bear market, if you consider it a correction, the entire cycle is roughly around 3 months. In about 3 to 4 months, roughly 1/4, it will be corrected. However, regarding this tariff, I personally think that its ultimate impact will definitely lead to a medium or long-term bear market, not just a small bear market. At least during Trump's term, there will definitely be one. Generally speaking, whether it's the 2000 internet bubble or the 2008 financial crisis, if you invest regularly, I personally think it's more reasonable to spread it over 24 months. For example, if it has already dropped by 20% and you plan to invest regularly, try to divide your money into 24 parts. investing at the end or the beginning of each month, and then observe. But I think regular investment during this stage is still quite reasonable. Especially after diversifying your investments, you won't suffer significant losses, but the gains you can achieve afterward will also be relatively limited. But the only significant advantage is that you can achieve an annualized return of about 8 to 20% in this market without having to monitor it constantly, which is quite okay. This is about regular investment. Let's talk about Tesla. It seems like people don't understand what this round of decline in Tesla means. In fact, objectively speaking, it means, bro, I can't sell my cars anymore. Essentially, this is the logic because everyone knows that Tesla built a factory in China during the pandemic, and since the outbreak, the electric vehicle market has been booming. However, during this boom, many impressive Chinese companies have gradually emerged, which has led to Tesla's market being eroded. So what core competitive advantages does Tesla have now? Because I don't know how Tesla is doing overseas, but abroad, gasoline cars are still dominant. But in mainland China, you should know that Tesla frequently resorts to price cuts, discounts, and interest-free promotions, yet overall sales still cannot be guaranteed, including the entire quarter at the beginning of this year, which was quite average. And there's one point everyone should consider carefully. Trump's tariffs this time are indiscriminately increased. So for Teslas produced in China, as well as those produced by non-US companies in other countries, how much will their overall sales costs increase when they return to the US market for sale? Has everyone considered this point? What else? To be honest, really is there any defensive target that is relatively okay? Actually, it's still quite good. Now, although it's expensive, if the overall PE is around the level of 25, a further 20-30% correction at this position is still quite good. As for others, why do I say this target is good? You can take a look and review with everyone. At that time, during the pandemic, it was already defined as a recession. You can see that WAMA didn't even break the long-term weekly moving average. This time, it might return to this long-term weekly K line. Overall, there are about 20 points left to go here, because each wave of WAMA marks the end of a bear market, and it always ends with the MA 120 weekly K line. This is an overall pullback, and actually everyone can see that, including in 2008. It didn't really pull back much if we're being objective, right? It only pulled back 20 points when the financial crisis hit. If you're looking to bottom fish individual stocks, prioritize these, meaning retail or essential products should be considered first. Because people always need to eat and drink no matter how bad the economy is. This is the most basic logic for these companies. What else? Everyone is eagerly thinking about AI. Actually, because this whole structure looks quite pessimistic, it's a 2B structure. In fact, let's objectively understand, when was this top formation created? After China's deep lake emerged, the market said that the demand for GPUs in the entire market didn't seem that high. But if you set these things aside, I think it's more about the Trump administration, which indeed intends to lead the economy into a recession, and then the Federal Reserve will start cutting interest rates. He knows that the current market has a relatively large bubble, so rather than letting the bubble expand, he might as well proactively deflate it. During his term, he can just enjoy the benefits of a whole interest rate cut cycle. You need to understand, when the stock index was at the 22,000 level, how much higher could it go? Because I have been mentioning this point to everyone since last July. If you participate in trading the target, you need to consider whether, after your participation, you can still benefit from the overall growth dividend of this company. However, if you look back to the past, you actually enjoyed it when it was booming, but its subsequent growth couldn't keep up. I think this kind of structure is very similar to what it was like at the end of 2021. Generally, if you look at the entire consolidation cycle pessimistically, you would wait for it to drop to a certain level. This is a 2 Brittany structure coming down, and when the 2 Brittany goes up, the entire time cycle is nearly 9 years, about 3/4 long. Here, forming this top takes nearly 1 year, and when it comes up here, it's almost the same. If this area doesn't hold, and I mean if it doesn't hold, then it will take at least another year to consolidate back. I hope everyone has this psychological expectation. As for other topics, I'm not sure what else to discuss with everyone, but we can chat about it. If a recession really comes, assuming a recession truly arrives, what is the best thing to buy? Oil, oil, oil. As long as you buy during a recession, there's basically nothing that can lead to a loss. If a recession truly comes, buying oil is always the right choice. Because you need to understand, during a recession, it means that the overall supply of these things, the market demand is far less than the supply, which leads to a significant reduction in the overall profits of these oil companies. However, the market experiences both recession and prosperity, and when prosperity returns, oil will gradually rise again. If you are on the other end of the cycle, at that time the news will be overwhelmingly saying there will be a recession, that something will go wrong. Companies like Occidental Petroleum or ExxonMobil are all very good. And also Croatia Casino and others, they will keep climbing up. To what extent will they climb? Let me think. They will keep going up until the market no longer avoids risks. Don't be concerned if it drops on Friday. On Friday, it might be due to some large institutions having insufficient margin in the index funds, or the money used for leveraged trading might be withdrawn from gold to cover the margin in the market. Usually on Thursdays and Fridays, 30-1900 Dutch 05 for 34 FOS 65. Generally speaking, there will be a significant rebound or substantially intraday volatility. Currently, looking at the overall options volatility, the trend movement on Monday is more than 3%. At least a 3% movement is expected. And what else? Discussing this market is very risky now. All these things have materialized. And I wonder how much cash everyone still has in their pockets. I don't have any. I've been empty. 005.39. Energy wealth is rising essentially, and the conference table is quite 13 cards Caesar in the underwear of Besser Tavern. The party, or say hesitation, challenges children's application challenges, assignments, and derivatives. This ghetto becomes important therapy, and it's already important NW.